Quick disclaimer, I'm not a financial advisor, and none of this is financial advice. This is completely speculation. This is nothing but informational purposes only, just a resource, and just documenting my journey. Let's dive right into it. On the hour, we did see a nice breakdown here today. Again, I did not really speculate today or really cared about the markets. There's no news today. So that's just my rule. There's no news. No need for me to really formulate an opinion about the market because the odds are there's nothing to drive price in the direction I would like it to go. So I just stay away from them, take a day to kind of get a break from the charts, focus on other things, had plenty of things to do on the list today. Being a father, husband, I work, I work a full-time job. So, definitely nice to not really cloud my brain with kind of making an assumption on price action. We had this nice kind of move breakdown, trade back up to this order block right here, this last down close or this last up close candle before a down move. We did have a nice little break right here. We make a projection from this low to this high right here. Nicely swept those buy stops. Again, remember, if you go refer to my basis of liquidity video, right, you can see it on the hour. We swept up those buy stops right here and then moved lower. So if you kind of not understanding, these moves and why these things are happening, check out ICT's month one content on his channel. So the idea that I have tomorrow is going to be this level of 15,417 and half a point, which is going to be Friday's low. And ultimately, I think for the week, I think we can take out this previous week's low. We did take out the previous week high so far from last week. And I think this could very well much so be a outside week if you're familiar with that, when you take out both sides of the range. I think that can be a very reasonable thing, especially with CPI leading up. A very manipulated event where price can absolutely storm in a direction and it can be manipulated, right? And we have PPI tomorrow. So we have two really big key inflationary data points, which are used to drive price in a direction, and they're very volatile. So my recommendation is to avoid the 8:30 Eastern time destruction that is going to be known as CPI. Let the dust settle, wait for 9:30, and let the markets kind of do their thing. Or you can avoid it completely. There's not going to be any button pushing for me, but I will definitely speculate for sure. Again, this level down here, 15,417 and half a point is what I'm looking at. And ultimately this week, the previous week low should be in the cards. Jumping down to the 15-minute. I think we could see this previous day high taken. Again, this opening range fair value gap from today, I think we can trade back in it. It usually does. Just when is, a key point. We had them, and again, that's another point of interest that we're kind of speaking on about correlating data points that can kind of justify bias. I think fair value gap from the AM session today can get filled in. We have an hourly order block, and we got the mean threshold here. So I think this all can be traded up into and then ultimately move lower. I think this move right here, why I think previous day highs, because it's just such a manipulative event that I don't think this fair value gap here in the PM session is going to be able to hold it. I think it's going to go for the kill. It's going to take some stops. If your people are already short from today and they're holding their positions, it can just run right up against them, take them out, and then just move without them. And then you can take out this previous day low, which I'll annotate here. And I'll just leave a question mark on it just because, you never know what could happen. that being said, we're going to go ahead and take a look at the daily time frame on NQ. So right here we have the previous week high, right? Friday's trading taken out very nicely. You can see the response again. We're taking, there's a high right here. There's going to be stops up here, buy side liquidity. We take it, right, with Monday's price action, and look what happens today. A move lower. This higher time frame justification and data point on the higher time frame can make a point to have a framework for, a bias. I want to kind of point your attention to this fair value gap right here between Tuesday, Wednesday, and Thursday's price action last week. How there's this little gap right here, right under Friday's low. This right here is going to be that 417 data point right here, where I think we can draw to. I think we'll trade up into this candle right here, this very strong candle before a down move. This could be known as a order block, a bearish order block, and we can move lower down into here. I don't think we have all the gas to get down here, but again, we can speculate, and we just have to wait and see, honestly. I'm not trying to force the market to go here. I do think that's a bit out of reach. Maybe for the week, it solely depends on how Wednesday, or how tomorrow and Thursday play out. If we kind of blow through this area here and kind of really just seem there's a lot more gas, then absolutely. But we may do another little recap of Wednesday's price action tomorrow, and then I maybe drop another video kind of giving my outlook on the rest of the week and kind of seeing what's possible. Because with these economic events, it can absolutely be an outside week. But then that will give us the bias for next week that a very large range week, we may expect to see some chopping. And again, this was a very large range week last week as well. So back to back, a large range week, than if we get an outside week. But I think this is a little less than 50% of the range here from this low to this high. Let's see. So coming back inside of this range here, again, this lines up with this data point, this fair value gap right here. So going back to that, this right here, this data point. And I think the level that gave equilibrium is going to be 15,410 and a quarter and 3/4. So that's right below Friday's low, right? To be very specific, 15,410 and 3/4 of a point. It could be the level we see. I believe we could see this previous week high taken. So we got previous week low on the mark for indices, and we got the previous week high for a dollar, which lines up because they're inverse pairs, or they're inversely correlated. So if we were seeing possible buying here, we have this fair value gap repriced. We touched this daily breaker right here between this last up close candle, right? After this low, high, lower, low, stop hunt, this candle right here, up close, this last candle, it's going to be sensitive and it's going to want to send price back up. So I think we can definitely see 105 getting smacked, previous week high taken, and we can see the mean threshold of this fair value gap from the daily time frame. And again, you got to zoom out, see the bigger picture, all the way back here from March. All right, it's going to be a draw. It's going to be a magnet. Price is going to want to see it take place. And if we can get real strong movement at $1, then we will definitely see it reflect in the indices. So I have 105.199 on the dollar index. I definitely think that's achievable. Just a quick outlook video on my framework for CPI this week and kind of how I'm looking at it. We're back on NQ, and I really do want to kind of share this really quick before we end this. So we have this accumulation here, and again, you got to think of power 3, and I'm gonna really dive into these concepts: accumulation, manipulation, and distribution. So we have this accumulation, right? Really just sideways whipsaw price action, and then we get an expansion, right? This could be known as manipulation into a bearish point of resistance. So this bigger daily time frame, this red area, is going to be a daily fair value gap, right? Traded back up into it, right? And then we saw the respective selling. And so we can see this smart money reversal and ultimately a sell program that's in effect. Okay. And then what you're going to aim for is you're going to just aim for the low of this original accumulation over here. So that's kind of the framework of why I touched on it. I couldn't make a very long video tonight really detailing exactly, the ins and outs of the market or why I kind of see this way here. But we're definitely going to touch on it. Hopefully this weekend I can get a video out on some different concepts that I'd like to employ. But until next time, good luck and good trading.